Thank you. It is time to take a look at your money here on Good Morning Quad Cities. But first, let's get the year stock market recap. Looking at everything from last year, the S&P 500 was down 19.5% last year. The NASDAQ down 33%, and the Dow Jones Industrial Average down almost 9%. None of that sounds like great news. Friday was the last trading day of 2022, as investors were more than happy to put the brutally tough year behind them. For the first of the year, we just saw that the S&P 500 fell 19.4%. The NASDAQ lost 33.1%, while the Dow Jones Industrial Average declined by more than 8%. It was the worst performance of the U.S. stock market since 2008. Financial advisor Mark Gravachewski joining us live to break down this awful news, but hopefully you can give us maybe a little glimmer of hope as we look into the new year.
Good morning to you, David, to you and Andrew and everyone in the control booth. And you're right. It's really nice to put that 2020 stock market performance behind
Absolutely.
us.
So inflation has declined from its high of 9.1% to its current rate of 7.1%. What are your thoughts on inflation for this year?
Well, the ultimate goal, David, is to return to a 2% target rate of inflation. Now, there's a lot of people saying we'll get a rapid decline this year, back down to that 2% target rate. I kind of disagree with that. Yes, we're seeing some improvement in the labor shortage, supply chain issues, which helped add to inflation over the course of the last year and a half. But in my opinion, David, the cornerstone of this inflation is caused by the massive amount of money that's been added to the economy, and that still exists today. In that category, not much has changed, and that's why I think inflation will remain historically high and above that 2% target rate. Again, we want to get back to well into 2024.
So if we look at the economy, we just gave the stock market recap for all of last year, and that's not great news. Pairing that with the inflation, where do you think the economy's headed for this year?
Great question, David. The overwhelming consensus on Wall Street is that the economy, will likely dip into recession in 2023, most likely in the second half of the year. Now, where there is tremendous debate on this, David, on whether, will it be a mild recession or much more severe? And the reason for this, somewhat gloomy outlook this year for the economy, goes back to the impact of these rising interest rates will have on, consumers, businesses, and ultimately the economy. We're already starting to see more and more economic data showing signs of a weakening economy.
It is the new year, and so a lot of people look at setting resolutions. And there was a recent survey that was conducted that said that the #1 financial resolution for Americans this year is to build an emergency fund. So if we're already struggling with inflation and high prices at the store, how do we achieve that?
Well, that's a great goal to set, especially given the certain outlook for the economy. And you're right, trying to save money in this environment of high inflation and high interest rates. And now you're kind of looking at the uncertainty of the economy in 2023. It's a difficult challenge. First, I would really evaluate any big ticket purchases, David. Is that big ticket purchase absolutely necessary, or could it potentially be pushed off a year or two until we get through this expected rough patch in the economy? Second is what I would call cash management. Really keep track of your expenses. Go through your utility bills, credit card statements. Keep track of your cash purchases. You'd be surprised, David, on where your money goes and how much you're spending on certain items each month. And hopefully, this should allow you to better manage and potentially cut back on some of those expenses to save money.
All right, Mark, thank you so much. We will see you next Monday.
All right, enjoy the rest of your weekend. And once again, very happy New Year to you.
You as well. Thank you so much.